Hey guys, and welcome to the Working Money Channel. So this coming from Marty Party, this is the picture. Check this out. This is what we've been seeing, guys. Essentially, S&P 500 dumping. We've got the CFDs on gold. That has been dumping as well. The Dow Jones Industrial Average has been dumping. But look at Bitcoin. Now, we talked a little bit about this yesterday. If you guys didn't catch yesterday's video, I will link it up here. Look at Bitcoin, though. Relatively flat, remaining fairly stable. So, of course, it is the weekend right now, and traditional markets are, of course, closed for the weekend. But even if we take a look at these dumps, guys, take a look at the dump here on the S&P 500 from open to close on Friday. That was over 8%. We take a look at the Dow Jones, DJI, like I've already got it on here, 7.4%. And let's take a look at the Russell 2000. That is, let's throw that on there, from open till close, okay? We've got 8.2%. Now you compare that to Bitcoin on the very same day. So we're going to look at, well, actually that's the weekly. Most of that did happen on the Friday. But we're going to take a look at that comparatively to Bitcoin. And as you guys can see, we are already starting a new week here for Bitcoin. Let's remove some of that. So that would be this week, March the 31st. Oh no, I guess this would be the equivalent week. But even if we took the week before that, the bigger bearish week, that was only about 4.3%. And this week, we're actually moving our way up over 1% to the upside so far. So an interesting observation here from Marty Party. We haven't seen cryptos reacting the same way as these stock markets. And guys, again, I did talk a little bit about this yesterday, but there are some more theories going around regarding this. All right, so what can we glean from the crypto market today? Fear and greed still staying firmly at 27. We're seeing Bitcoin move, but we're also seeing altcoins move. There isn't too much of a discrepancy between that dominance yet. I think I want to make that caveat, say yet. Market cap is only down by 0.39%, and volume's only down by about a half a point. So again, I have to reiterate this. When we do see markets crash, generally what happens is we do see crypto crash as well. They are tied assets. 24-hour changes, though, in most of the crypto space, you guys can see 1% or point something percent or maybe 2% in some cases. Most of these coins are staying relatively flat, even the altcoins, which I find very, very interesting. This tells us that there could be a shift in the works. Now, Anders here painting a larger picture of this. Okay, crypto is global with no issuer, thus not part of the global trade war with tariffs. And so, guys, this is why we saw this last week. This is why the stock market was down and crypto was up. I know I showed this same tweet yesterday. Even larger picture is crypto, to a large extent, being immune to individual governments' interventions at a large scale. Hence why it should be the basis of the global financial infrastructure, and we're figuring this out. It takes a crisis in order to build safer and more resilient systems, since the system's weaknesses are only exposed during a major crisis. So let's let the phoenix rise. More and more, guys, am I thinking that, this is now perhaps the beginning of a great reset, a great financial reset. And now that Trump has put tariffs on the table, the world is going crazy and trying to figure out what to do next. FFX man here saying, a neutral bridge asset would fix the weaponization of a single currency and its economy. Anders here responding, this is the larger picture people miss, especially when it's a country with the world reserve currency starting the trade war with the whole planet in a very literal sense. Very, very interesting. Another one here from Anders. With a global trade war going on, investors will look for an asset class with high potential returns not impacted by tariffs. So where are investors turning? That's the other question, right? If, let's say the S&P 500 is down significantly, down by 8%, and, investors are worried about their portfolios, well, put it into Bitcoin. Obviously, now it is looking more resilient than traditional investment instruments. And maybe even altcoins like XRP, guys, the cryptocurrencies with real world value. Right now, XRP is going for $2 and almost 13 cents, holding up above former resistance. In the past, when we would have seen markets dump that way, XRP would have been down below $1.96. I would almost guarantee that. I'm willing to wager money on that. If it was 2021 or if it was 2017, the fluctuations would have been ginormous. And today in 2025, things are looking different. So crypto is global with no issuer and traded globally. There will be no tariffs on crypto, probably why crypto is not dumping while equities are getting hammered. Danny Dark down here also commenting that, the molasses about to tip over. That is also going to play a large role in this. Now, Frank Curzio, he said this, okay, the greatest wealth transfer since 2008 just started. Look at the financial titans. Goldman Sachs, BlackRock. Don't forget, guys, Abu Dhabi, $1.7 trillion wealth fund, okay, and it's connected to cryptocurrency. They just did do a big deal with Binance. They're all quietly putting billions in this one controversial asset class, and there's a 60-day window for investors to act. But then he goes on to say, want to know what all started this? GameStop, that's what. They had $4.7 billion that sat there in cash. Of all places, guess where they're going to put it? I'll put it this way. The board just voted to make Bitcoin a treasury asset. So now even GameStop is investing in Bitcoin, guys. This isn't about GameStop being a meme stock. Companies are realizing they can make a crap ton more money putting cash in Bitcoin than treasuries. But that's just the beginning. And he does post some supporting materials here, some clips from a podcast. I'm going to link this in the description if you guys want to watch those clips. But I'm just going to read you this. Okay, Goldman Sachs, Wisconsin's pension fund, the Bank of Montreal in Canada, Abu Dhabi's wealth funds, they're all loading up on Bitcoin last quarter. They all did load up on Bitcoin last quarter. These are billion-dollar institutions quietly positioning. But why now, you ask? The game has just changed. Institutions could not touch crypto before this. The SEC would destroy them. So remember that, guys. The SEC, well, especially in the US, and more particularly in the US, they would have destroyed them. Other countries around the world, other banks from other countries around the world, they, I guess, could have gotten on board earlier. But, the world tends to follow the US when it comes to trends. Remember Signature Bank, though? They got crushed for touching crypto. But with Trump elected and Paul Atkins coming to the SEC, things are going to change. Okay, major economies worldwide are exploring Bitcoin reserves. Germany and Switzerland lead in Europe. Russia and the Czech Republic in the east. Japan, Hong Kong, and Poland are all mentioned as well. So here's the perspective you need. Institutions manage $100 trillion in assets. BlackRock says 2% flows to Bitcoin. That's $2 trillion into the $1.7 trillion asset class. So you do the math. Only 164,000 new Bitcoin are produced yearly after the 2024 halving. Cynthia Lummis proposed the U.S. buy $200,000 annually, and that's before companies follow GameStop's lead. The big money hasn't even started flowing yet, okay? Retail investors still on the sidelines. Corporate America just waking up. New pro-crypto regulations coming soon. The demand shock will be unprecedented. So when he's talking about retail investors, by the way, he's not talking about people who have, people who are the early adopters, people like you and I. He's talking about the FOMOers who are going to FOMO in near the top. And so we have to have a strategy. We have to be prepared to cash out when our targets are met. And for more information on my targets, you can follow me at patreon.com/workingmoneychannel. I've opened up my portfolio to all my Patreon subscribers. You can see what I'm going to be selling, where I'm going to be selling it, price points, specific coins, all that fun stuff. So if that's something you are interested in, patreon.com/workingmoneychannel. We cannot mess this up, guys. Remember Raoul Pal's motto, we cannot mess this up. So trade it short term if you want. He says down here, maybe it goes back to 50,000. So he's talking about Bitcoin. Maybe it hits $100,000 again, but you're missing the bigger picture. This is a fundamental shift in how finance works. I've been pounding the table since Bitcoin was $6,000. The macro trend is locked. So pro-crypto regulation, massive institutional demand, a fixed supply, start picking away at it. I really do wonder when we're going to see this huge liquidity move. I think we're on the doorstep of it. If, we got to watch these tariff talks very, very closely. But anyway, I wanted to thank Marty Party, Anders, of course, and Frank Curzio for posting that. Now, Fojack here bringing us an interesting clip of our buddy Jim Cramer. Well, he retweeted out Crypto Maniac's tweet. My buddy Jim said Monday will be bad. Sell your stocks, sell your crypto, and run away.
The president doesn't try to reach out and reward these countries and companies that play by the rules in the 1987 scenario. The one where we went down 3 days and then down 22% on Monday has the most cogency. We will not have to wait out too long, will we? We'll know by Monday. Fortunately, we had an excellent set of employment numbers today. At least it makes it less likely a crash will necessarily lead to a recession. But if President Trump stays intransigent and does nothing to ameliorate the damage that I saw these last 2 days, I'm not going to be constructive here. I will contain my anger, but only because I lived through 87, and in the end, I came out okay. I was in cash for the crash. I know what this feels like. Oh, and if Europe moves against our fabulous tech companies next week, then I will be furious. That I promise you, because it should not happen.
So I wonder if we should take that as the inverse Cramer indicator. Maybe now's the time to buy according to the inverse Cramer indicator. I don't know. That's not me giving you guys financial advice. My positions are locked in. But again, you'll find out more at patreon.com/workingmoneychannel. I also wanted to mention as well that I have opened up the Working Money Channel merch store, a brand new merchandise store. I was not happy with Teespring, the company that YouTube integrates for their merchandise. So I've launched more items, actually, more SKUs here. XRP bearable guide. If you guys are interested, you can get an XRP insulated mug. Keep your coffee hot, keep your cold drinks cold. It's all there, and the link is available in the description of the video for you guys. So another thing too, I don't want to say it's throwing a wrench in the plans, but it is definitely playing a role in the new financial structure. We've got stablecoin bills. We've talked about those quite a bit over the last several days, weeks, months even. Jacob King bringing this to our attention. So Tether, which is the largest issuer or the biggest the company that issues the largest stablecoin USDT, well, their CEO Paolo Ardoino has declared Tether won't try to make USDT compliant with US laws. Their stance follows the SEC's latest crackdown on stablecoins. It's clear this fraud is unraveling. But guys, Tether, this is what they said, okay? Tether may launch actually a brand new stablecoin if U.S. regulators push out USDT. So I guess Tether's going to keep USDT intact. And, if U.S. regulators reject it, they're going to actually, or at least they're thinking seriously, or at least this is what they're telling us, that they are going to release a new stablecoin. With all the talk about stablecoin legislation in the U.S., some may or may not negatively impact foreign issuers. You might expect the biggest and most controversial issuer on the planet to feel the heat, but that's far from the case when it comes to Tether. In fact, Tether has no real issue with its flagship stablecoin USDT being banned from the US. To circumvent the potential issue, Tether is considering creating a new US domiciled stablecoin that will comply with pending American stablecoin laws. That's probably a very good move on their behalf. We believe that our main stablecoin is perfected for emerging markets, but we can craft a payment stablecoin that works for the US, he says. Stablecoins are digital assets that are typically pegged to the US dollar. As you guys know, as parallel stablecoin bills race through the House and Senate to floor votes, questions have abounded over the fate of Tether. And guys, I guess this is the plan now moving forward. They're not going to play ball when it comes to Tether, but they could, in fact, issue a brand new stablecoin. That totally adds a whole other layer to this story. So an interesting piece of news there. Wanted to thank Jacob King for posting that. Mr. Man also commenting, guys, at the end of April 2025, okay, this is at the end of the month, something very significant will quietly take place and most people won't even notice. By April 30th, financial regulators across Europe will submit reports detailing exactly which companies their banks, investment firms, and insurance providers rely on to run their technology systems. These aren't just spreadsheets or IT vendors. This is part of a broader European law called the Digital Operation Resilience Act, or DORA. So we haven't heard too much about this, have we? Or at least I haven't. DORA isn't just about cybersecurity. It's about control. It's about giving financial regulators full visibility into the digital arteries of the financial system. So who runs the servers? Who powers the data transfers? Who could cause a system-wide disruption if they were compromised? Cyber pandemic, anyone? Do I even have to mention how Klaus Schwab has been yelling this from the rooftops for the last several years? I'll see if I can find a video I did on that, and I'll link it up here. This law forces regulators to identify those players, especially big tech companies that banks and institutions depend on, like Amazon Web Services, Microsoft, Google Cloud, so on and so forth. The April 30th deadline is when all the data is due. Okay, after that, the European authorities will begin designating which of those tech providers are now critical. And once labeled as critical, these companies will face a whole new level of direct regulatory supervision. That means mandatory stress tests, simulated outages, detailed inspections, and ultimately the power to shut systems down if regulators deem them too risky. This is the scaffolding for what is coming next. So again, an interesting layer here to add to a new financial system with, that's going to include cryptocurrency. As central banks prepare to issue digital currencies and financial institutions begin trading tokenized securities and digital assets, there needs to be an invisible but bulletproof operating system beneath it all. That system cannot be allowed to fail, and it certainly can't be left entirely in private hands. DORA, though, ensures that the public sector has full access and control over the core tech running the new financial system. It gives regulators a window into and a handle on the very platforms that money will move through in the future. He says the public won't hear about this either, okay? There will be no headlines on April the 30th, but soon after, people will begin to notice the little things, payments that pause unexpectedly, digital wallets that require facial verification, tax systems that collect instantly rather than quarterly, money that behaves more like a software rule than a physical tool. This won't be explained as a result of DORA or CBDC infrastructure or ICT oversight. It will be framed as modernization, security, or fraud prevention. But what's really happening is that financial infrastructures are being hardened, synchronized, and brought under coordinated control before the next phase of programmable money goes live. So this is happening in Europe, but don't think for a second that it cannot happen in other countries. If you guys live in, I don't know, the US, Canada, maybe Australia, maybe somewhere in the Middle East or Asia, Africa, South America, wherever, it could happen to you next. Be aware, be very aware. Wanted to thank Mr. Mann for posting that. Now, Vandel did just post this, guys. Matthew Piepenburg exposes how central banks and the IMF quietly telegraph their next moves in advance. We've talked about Bretton Woods 2.0 on this channel in the past. We've talked about organizations like the IMF, the WEF, always saying it before it happens, so they look kind of clever. Well, we know they plan these things. Listen to this interview with Matthew Piepenburg. By the way, the full discussion is linked here on Vandel's YouTube channel. I'm just going to play you guys this 1 minute, 40-second clip. Listen to this.
Nefarious groups like the IMF, the World Bank, and central banks in general, and the Fed in particular, love, and certainly darker motive kind of political unelected officials love to use crisis, manufacture crisis as an opportunity, whether it's coincidental or intentional. And during the COVID crisis, the IMF had this wonderful video with Georgina on there saying, look, and even, of course, the great Klaus Schwab during the WEF saying this is the crisis of a generation. No, it really wasn't. Even if you look at just the math, despite the horrible nature of people who suffered from it, the math just didn't compare. But they were comparing in 2020 COVID to World War II. And I've said this many times. I'm an American with a German father, French family, live in Europe, spent half my life in two different continents, but anyone in Europe knows with the 85 million killed during World War II, the destruction of most of its cities, the occupation of my home, where I live now, by the Germans, in the slaughters in villages and the graveyards filled. You cannot even compare the crisis of World War II to COVID. And yet, what they were trying to say is, look, we have a debt crisis now because of COVID, effectively. Well, the debt crisis was there long before COVID. And what we need to do now is think about a Bretton Woods 2.0. This was in 2020. This is a classic, you can call it PSYOP, dark state, or coincidence. This is a classic method of telegraphing years in advance what you're going to do, blaming it on some extraneous event that's not your fault, and then using that as a pretext for more centralization, because centralization always follows desperation. When, as Hemingway said, when you get into a debt corner, nations do two things. They debase their currency, they go to war, and they centralize. Three things, really. It's all tied together.
So it's all tied together and it's all part of their playbook. Coincidentally, Anders also posted this yesterday. Nothing happens until we see a global crisis arrive. This was a conversation with, at that time, Christine Lagarde was part of the IMF. Listen to what they said in 2019 before the beer flu occurred.
I would say if you look back in history, the times at which a dominant currency was displaced, it was always a bit of an accident that brought it. It's not like a smooth trend that eventually brings it to parity. Something happens in the world, it's a crisis, it's a war, and that catalyzes a major change. So these processes, I think, are probably going to be very nonlinear. At the same time, I think it's hard to imagine that it would happen in the next couple of years. It's clearly something that's a bit in the future.
Well, let's hope we can reach to that state without a war. That would be really hope.
Telegraphing the debasement in 2019, all part of the plan. One more clip here with Matthew Piepenburg from Vandel's show. The QT that we're seeing now is going to quickly turn into QE, and I have a feeling this is what Trump is expecting too. Watch our latest interview to understand what's unfolding and why the financial reset isn't just speculation.
Because your government and your constitution has been muted, your constitution has been killed, sound money was killed, and your government isn't telling you the truth because they can't. They can't admit, they have a pathological inability to say we really screwed this up. Maybe QE1 was where we should have stopped. Maybe our Fed balance sheet shouldn't have gone to 9 trillion at some point. And believe me, the QT that we're seeing now is very quickly going to turn to QE. We're going to see more rate cuts, not rate hikes, because we can't fight inflation at 37 trillion. We don't have a Volcker solution. Again, these are complex things to the average man and woman, as they should be, because they have other things to worry about. 20% of Americans have a job that just all their salary goes just to their rent. They take a second job just to pay for things.
The plebes will be distracted, and those who have cash on the side are really going to have an opportunity here, guys. Ian Bin's posting this. Now, this was an older tweet from, I think, Ross Vandermeer. Yeah, Ross Vandermeer did originally post this, I think, a few years ago when Ian Northing did ask, do you think a smooth transition or do you think we're going to see a crash? And Ross Vandermeer, again, this is an older riddler in the community. Personally, he thought a huge crash, but smooth transition is also possible only when certain conditions are met. And so, guys, that begs the question, are the conditions right there in plain view? Do we see what's happening right before our eyes? Is this the beginning of a new financial reset? I know some of you guys are getting excited by XRP. Apparently, this was spotted in Santa Ana, California, courtesy of Elder here. Needless to say, there's gang activity and graffiti on city blocks and buildings. Never did I expect to see XRP gang coming into the neighborhood and taking over. So guys, are you ready? Are your bags packed? Crypto market staying resilient amongst stocks. I think there's probably a reason for that. And for more information, again, on what I'm doing for this particular bull run, because it is changing, boom, like that, in a moment's notice, I could be selling, I could be buying more, actually. Just the other day, I did get into a new position. So, I'm treating this moment to moment in real time. If you don't want to miss a move, patreon.com/workingmoneychannel. And please subscribe to this channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.